I always choose a stock of the day before we kick it off, and I thought we'd take a look. Haven't looked at it for a while. Spark Infrastructure came up with an update saying TransGrid, in which it holds 15% interest, has reached a final investment decision to build Project EnergyConnect, having now received final approvals from the Australian Energy Regulator. Project EnergyConnect is the proposed new 900 kilometre high capacity electricity connector between Robertstown in South Australia and Wagga in New South Wales. It also includes a spur through New South Wales and northwest Victoria as well. Spark's an interesting one, is it? Infrastructure group?
Yeah, look, I've kept an eye on a few of the infrastructure plays. Like APA is a fan favourite of mine. It looks discounted enough that it looks interesting. But it's just where we are in the cycle. You're in a cycle where bond yields, in theory, should be rising. It's being held back by QE, but inevitably you're going to get tapering and then bond yields will rise. So if you're looking at it over the next 6 to 12 months, I think the risk in all utilities is a higher bond yield will be negative for you. So in that context, it's really hard to see them outperform.
Right.
History is against you. That's why we stayed out of utilities. Most of them, I mean, apart from the retail side of things like AGL, which has been a disaster because of lack of policy work.
Okay.
But
and
the others
we've got Origin coming up.
Exactly.
So,
that's an interesting one. But look, I think overall utilities are not bad, but it's just going into a macro where it's going to be really hard for them.
Yep.
I think Spark's okay. I'm a fan of APA, but it's just, I think it's going to be tough. I think they'll underperform over the next 12 to 18 months, probably for a few years, because I think the bond yield cycle has to reach some kind of normalization. I don't think it's where it is. I think it's probably double where it should be. Right. So I think probably you're going to get somewhere at 3.5. So there's a long way to go. That will see some de-rating in that sector.
Okay. All right. Francesco?
Yeah, look, I think Mathan's right. One thing with a lot of these, what they call bond yield proxies, so the infrastructure stocks, the property trust stocks, is really get a good insight into their borrowing profile, their debt profile, because there is some misconception. There's a number of infrastructure stocks that have actually taken really long-term borrowings at really low rates. So they're locking in rates now for 20, 25 years instead of doing 5 years, which might have been normal. So probably best to get an understanding of what their balance sheet's like there. But I mean, this announcement today or this week, the company even states that it really is not going to add a great deal to their growth yield plus strategy. But what it does do for them is sort of identify a sort of lower carbon footprint for them as well. So. Right. You know, if you want to look at it from an ESG point of view, you know, as possibly giving them some boosts in that area. Our guys have a hold recommendation on it, and I don't disagree with that. I think that's probably where it sits. You know, there's not a lot of clear growth opportunities for them. And then you've got a lot of pressure to reduce retail electricity prices. So you've got wholesale prices going one way, retail going the other, and they're getting a bit of a squeeze. And we've seen that obviously happen with AGL and Origin. And we'll talk about it a bit later, obviously. I would prefer Origin, and I'll give more detail on that.
But the interesting part there is, it also we can understand the dynamics now, but of course over the next couple of years, renewables are going to become a much bigger part. And obviously, there's a lot of policies on a state side about putting up battery technology, wind, and solar, so forth. So how that eventually plays to the whole dynamics of poles and wires is a unique case. I don't think we quite appreciate how that could change, but I think it will change. The dynamics will substantially change, but we just don't know how that's going to settle. So it is an area where I sit there and go, you know what, you've got to keep an eye on it, because it's a bit like internet. The guys who are running the utility side will do relatively well when everyone's making massive money on the online models. Similarly, if you do get to a point where there's renewable energy takes a substantial part, the guys who are connecting and distributing will have some play in it. I just don't know how that'll settle, but that's one to keep an eye on.
It is fascinating, this whole energy market. I was sitting next to Kevin Gallagher from Santos at the footy last night, talking big on hydrogen.
Well, there's
as
there's a
as a
huge
big
upside.
energy play.
Yeah, well, that's part of the battery play, right?
Yeah.
And it's not going to be one particular technology. I think there'll be a basket of technology, and hydrogen will be one of them.
Yeah.
It looks like, anyway.
Yeah.
So we won't know that for a few years, and I think people are getting too excited that suddenly you're going to get batteries everywhere tomorrow.
Oh, yeah, no.
It'll take
It's
3 to
a
5
long play,
years,
yeah.
and when that happens, I think you'll get a basket of ideas, and hydrogen potentially could be one of them. And look, it's very promising. Then again, there are things like lithium and so forth already prove that they can be.
I think the market will determine what's the dominant player in that sort of, when it comes down to costs and efficiencies.
Yep.
Obviously, the big players will try a lot of different solutions, but over time, the fundamentals of the economics behind it are going to sort out who survives and who doesn't.
Exactly.